everyone, welcome back to 10-Minute Investing. If you're new here, I'm Bo. I live in Chicago. I work in B2B tech and I have been investing for the last 3 years. I have already invested over 40K-ish in 3 different portfolios: retirement, house, and a car. I'm not affiliated with any investment firm. I self-taught myself about stock market investing, different investing strategies, and so far I have about 13-ish percentage return. So if you are into my tips and tricks, keep watching. In my last video, linked here by the way, I explained what an ETF is, what website to find them all on. If you missed that one, please check it out. I won't be repeating that info here. Today, I want to go a bit deeper into it and tell you about different types of ETFs, which ETFs are best for your investment strategy, what metrics to check before investing in an ETF, and I will show you step by step how to buy an ETF in my brokerage account. So stay tuned. Let's start with 5 main types of ETFs, categorized by the assets inside. I used an ETF screener from ETF.com. I will leave the link in the description. First type is equity ETFs, so basically stock ETFs. When you buy equity ETFs, you buy equities, stocks, but you don't buy just one stock, you buy a mix of stocks. If you invest in one stock and the company fails, you lose all the money. But if you invest in an ETF, so multiple companies, and one fails, you still keep majority of the money because it's just one out of many. So ETFs can hold hundreds or even thousands of stocks in them. Equity ETFs can represent indexes like the S&P 500 here, and these are called index ETFs. One example is SPY. I own a lot of it. Equity ETFs can also represent specific sectors like tech or healthcare. XLK, XLV are such ETFs. Or international equity ETFs that track international stocks like European stocks or Asian stocks. VPL and VGK are such ETFs that I also own. You can find more such ETFs if you just go to the etfscreener.com and you just, go through the filters. You will find a lot of examples. Second, fixed income ETFs, aka bond ETFs. These hold bonds, all kinds of bonds, fixed income because bonds are fixed income assets. When you buy bond ETFs, you buy a mix of bonds, not just one bond. BIL is a good example. It holds US Treasury bonds, 1 to 3 months maturity, so short-term bonds, bills basically. And the third type is commodity ETFs. Commodities like gold, oil, and other more alternative commodities. Commodity ETF may have one type of commodity, by the way, like gold, GLD. For currency ETFs, currency ETFs track currencies and their price fluctuations like US dollar, euro, yen. Like USDU here tracks US dollar against a basket of global currencies from developed as well as emerging markets. And final one is alternative ETFs. I personally don't own any, but you can get ETFs that hold like real estate assets or ESG focused companies, so like companies with a lot of environmental, commitment. If you're into that, that's your ETF. And the fact that these ETFs all include different assets for you as an investor means that you may use them for different purposes. Some ETFs you may use for higher returns, and others you may use for storing cash short term, for instance, like a cash hedge. Each ETF has a different risk reward profile, right? So picking the right one for your portfolio depends on your investment strategy, right? Whether you're an aggressive investor, how long you're investing, all that. So which ETFs are best for your investing strategy? 1, your investment horizon, your risk tolerance. Both terms, by the way, I explained in this video. Please go and watch it. I'll start with long-term investors and more aggressive investors. If you have moderate or moderately aggressive risk tolerance, which is me, and you invest for 20 plus years, you can go for equity ETFs on top of individual stocks. Why? Equity ETFs provide highest returns, but also they're more volatile, hence higher risks, more losses. But if your investment horizon is 20 plus years, you can handle volatility. Like you can handle ups and downs because it's long-term, you're not withdrawing anytime soon. Returns-wise, broad market index ETFs like S&P 500, for instance, historical is like 10% return that you can expect. Other S&P 500 index ETFs are VOO, that's issued by Vanguard. IBB here issued by iShares. And you can also go for more niche ETFs like QQQ, which is NASDAQ 100 ETF, and it's a mix of different tech companies. It's even more volatile than S&P 500, but the return is approximately 16.7% in the last 10 years, so more than S&P 500. But as a long-term investor, you can handle that volatility, but you will get higher return. Next, if you're a more conservative or a moderate investor, and if your horizon is anywhere between 5 to 10 years, so shorter, you should look at bond ETFs really, because here, BIL That's short-term bonds or bills. If you look at the quote here, you can see that you cannot expect high returns from this ETF. In fact, if you're buying bond ETFs, you're buying them for hedging cash, basically, from sudden market dips or just to preserve the value of your portfolio and to minimize risks. It doesn't mean, by the way, that an aggressive investor cannot buy bonds or bond ETFs. I personally own bond ETFs. I have a moderately aggressive risk profile, and yet I keep some portion of portfolios in bonds to balance the risks, and just in case, so I can sell bonds. For instance, when the stock market dips, I need cash to buy stocks, I can sell bond ETFs, right? Also, if you have medium to long-term horizon, you want to diversify your portfolio, make sure it doesn't just hold stocks or just bonds. You can buy commodity ETFs or currency ETFs to diversify. These are not considered the best fit for aggressive investors though, because in the past, like gold returns have been like 4%-ish. Sometimes it was like 20 plus, sometimes -4. So it depends, I would say, on the economic situation. I was buying gold ETFs for the last 3 years, and so far the return is almost, close to S&P 500 return. But that is because we are kind of in this economic situation where USD, US dollar is kind of dipping and gold is going up. So, I didn't expect gold to come as close to returns of S&P 500 here. This is a screenshot of my standard brokerage account. But yeah, when the currencies dip, gold goes up, some commodities go up. Silver, by the way, is up as well right now. So to sum it up, what ETFs to choose for your investment portfolio and strategy? The answer lies in your time horizon, your risk tolerance, and your investment goals. So basically, your investment strategy. If you invest 20 plus years and you're aggressive, you can play with equities and equity ETFs, retired and conservative or nearing retirement, bond ETFs, or individual bonds. If you want to diversify, commodities, currencies, or alternative ETFs. Moving on to ETF analysis. Before you buy any of these ETFs, you have to know at least these 4 metrics that I'm going to show you now. I will be showing you ETF screener. First is issuer. It's called fund name here. Stick with well-known names like BlackRock, Vanguard, State Street, Charles Schwab, Invesco. These are the biggest providers of ETFs, the biggest funds. They have plenty of liquidity. If something happens, they can pay it off. They won't fail fast. You have time to move, rebalance your portfolio. These are the oldest funds as well. They have been on the market for decades. They are more reliable than other funds. And when you invest with one of them, it's just a bit more secure. Assets under management, AUM, you can see it in the last column here. When you have a higher assets under management number, more popular, more liquid ETF, they have hundreds of billions of assets under management. You want to invest in those ETFs. Personally, I do not invest in ETF. It's if the AUM is less than $1 billion, it's too small for me. I want a big ETF. Okay. Next, expense ratio. This is what you pay annually to hold the ETF, right? So lower is usually better. For example, BOO has an expense ratio of 0.03%. Personally, I avoid anything about 0.1%. Why? Because this percentage, you don't pay it anywhere to a fund directly. It just gets withdrawn like a commission from your return by a broker. And if you can pay less, expense ratio, pay less. So look for ETFs that just require lower expense ratio. And finally, 5-year return. You will have to click on the ETF and go to performance here to see that one, because on the main page, it only shows 1-year return. 1 year is not enough, I would say, to adequately assess. It's about past performance, how this ETF has been given returns in the past 5 years. And, of course, history and past returns are not a guarantee of the future returns, but you still want to see long-term performance, right? You want to see how this ETF plays out long-term if you hold it for at least, 5 years, 2 years, right? I try to look for ETFs that offer at least 10% return. If it's equity, if it's bonds, different, of course. Bonds do not provide such returns. Usually it's much lower. All right, almost done. Last but not least, let me show you how to buy an ETF in my brokerage account. I'll be using my standard brokerage account. I have it with Interactive Brokers. I have just enough money for one IAU ETF. That deposit hasn't hit yet, so we're buying just one ETF, but it will be enough to show you. First things first, I tap on transaction button here, and it might be called trade in your interface, in your app. Depends on your broker. Then buy order, type ETF ticker, the symbol IAU or whatever you're buying, SPY, BOO, whatever. Enter a number of positions. I just want one, but you depending on how much money you have, you can buy 10, you can buy 20. And choose market order or limit if you want to set a price. I will go with market here. I'm okay with this price. I just want to buy now. I don't care about the fluctuation. And confirm by swiping Again, in your app, it might be different, but that's it. You should get some sort of screen telling you that you have just purchased an ETF and it should be in your portfolio now. You should see it. And that's done. I think I have 33 gold ETFs at this point in like overall in my different accounts. I buy them all in the same process, so it's really easy. Let me know though if you have any complications in your brokerage account. I will be happy to help if I can. And that's it. I think I've covered how to pick the right ETF for your strategy, what metrics to analyze before investing in ETF, and how to buy it in your brokerage account. If this helped, hit the like button, subscribe. Let me know in the comments if you have any questions, and maybe you have a question about specific ETF. Let me know, and I will see you next week. Happy investing.